Hello, everybody. So for this video, we will use the same example that we used for the previous video. Ang difference natin ay, dun sa previous video, past 37, dito naman, ang gagamitin natin ay PFRS 50. And I know that this is quite new. And honestly, when I first read this, I felt a little bit uneasy. Kasi, bakit ganito ka-komplikado to? But it's only when you feel uneasy and it's only when you do things that you initially don't know, that's the right area for growth. No, if you keep doing all the things that you're already well versed about. There's no growth there. It's just enjoyment. It's just a feeling of I just know this already. So there's this confidence, but not really adding value to us. So we will only be able to add value, to learn, and to grow if we dare to do things that we initially don't know and we initially stop at, basically. But I'm really happy kasi I really took the time to learn about this and hopefully ay ma-relay ko sa inyo to na mabuti para matuto rin tayo at makapaganda tayo sa ating future quizzes, future exams. So, let's do it. Let's start again with Monkey Company. Looks familiar, right? But this time, instead of past 37, ang gagamitin natin basis ay PFRS 15. Okay. And it's gonna look a little bit familiar for a while, but I'll highlight the things that will be different. First, the number of estimated facts will be the same. So that would be for year 2023, 12 million divided by 150. So that's 80,000. And our estimate, again, 75%, yung hindi magagamit. So yung magagamit natin ay 25%. So our estimated facts is 20,000. And if we convert it into estimated units, we simply divide our estimated facts by the number of facts per unit or per giveaway at 20. So our estimated units would be 1,000. And our net cost per unit would be, once again, the cost of the inventory of the giveaway, which is 500 plus any transfer cost, in this case, wala naman, minus any payment from the customer, which is again, wala naman. Pero sulit pa rin natin para matandaan natin. So the net cost per unit is 500. So the standalone price for premiums would be the estimated units multiplied by the net cost per unit. Now, if you watch fervently our last video, this amount actually looks familiar to you. Under past 37, this would have already been the premiums expense, but this is different. And by the way, after preparing the PFRS 15 basis for both of our examples, meron tayong set of summary notes for this. Okay, but for now, let's just answer our example. So ito, imbis na premium expense, ang tawag na daw natin dyan ngayon ay standalone price for our premiums. So our sales is 12 million, standalone price, and our premiums would be 500,000 standalone. So our total standalone prices would be 12.5 million. But in reality, yung ating premium, kasabay naman siyang nabenta as our sales. So we already have 12 million. Okay. So we will use the standalone fractions, 96 and 4% as the basis to allocate this 12 million. So tinasabi natin na itong 12 million, may parte dyan from our sales, pagbenta mismo ng ating powder juice product at para sa ating premium. So our journal entry would now be quite different, right? Imbis na debit cash, credit sales for 12 million, hahatiin. Meron na tayo ngayong contract liability premiums, parang unearned revenue. Kasi sinasabi natin, meron tayong binenta for the sake of revenue. And we will only recognize this as income when we distribute the premiums, the giveaway. So that's the thing that will be different here. Pero yung ating computation dito, once again, imbis na premiums expense, ang tawag ay standalone price. At gagamitin natin yun to allocate the price of 12 million. Now, in our second entry, what we debit and credit here is not the estimate anymore. Under our past 37, what we debit is the estimate, right? But under our PFRS 15, we estimate or we debit the actual cost. So that would be actual units times actual cost. In this case, it would still be the same as the net cost per unit. Okay. So our actual units is 800 multiplied by the cost per unit is still 500. So ganyan na, diba? No? Kasi kanina, estimated units yung premium expense. Okay. Ito. Contract liability, premiums, debit, credit, income from premiums. Meron na tayo na-distribute na premium. Therefore, meron dapat tayong i-distribute na income. Ang ating initial liability, total, CL, premiums, is 480. Yan daw, gagawa natin to ng kwento, ay makiklaim ng ilang units. Yan daw ay makiklaim ng 1,000 na units. So, sabihin natin dito, 1,000. So, out of 1,000, ilan na yung na-redeem natin at ilan pa yung hindi na-redeem. Ang na-redeem na natin ay 800. So, ang hindi pa na-redeem. So, yung na-redeem, that would now be considered as income. At yung ating unredeemed, that would still be considered as our liability balance. Okay? So, this is 80% and this is 20%, right? So, 480 times 80% would be 384,000. And 480 times 20% would be 96. So, we would recognize, lipat natin tong mga amounts dito sa isang column. There we go. Makita natin account titles natin. There we go. So, we would recognize an income of 384. The balance would be 96. We do the same thing in 2024. The number of packs that we have sold is 15 million divided by 150 sales price per pack. So that's 100,000. Our estimated packs that will be used would be 25%. So that would be 20,000. Our estimated units would be 25,000 divided by 20. So that's 1,250. And the net cost per unit would be the same. So that's still 500. And the standalone price premium would be 500 times 1, 2. So that's 625,000. And we'll use this again to allocate. 625, yung ating sales ay 15 million. So the standalone prices total would be 15,625. But the real price, we debited cash, we have received 15 million. So, ang percentage na ma-allocate kay sales ay 96 at 4% naman kay premium. That's it. And this would be our journal entry here. We have received 15 million. Yung sales natin will be 14.4 at ang ating contract liability for premiums would be 600,000. Now, in our second entry, the premium expense, once again, is the actual unit times the actual cost or net cost per unit. Ang actual units na na-redeem natin this year ay 1,100. At ang ating net cost per unit ay 500. That's it. And lastly, ito, how much is the income from premiums? Now, so we have redeemed a total of, for this year, 1,100. Okay? Ito, picture. Out of picture, ilan yung na-redeem natin from last year? That would be, from last year, may natirang 200. Ilan naman from this year? So kung 1-1 yung total natin, ibig sabihin, 200 from previous year, 900 from this year. So, the income from premiums would be equal to ang ating contract liability premiums would be multiplied by the balance divided by the total. Ano yan? So ito, ang ating contract liability premiums na na-recognize last year ay 480,000. Out of 480,000, ang natirang balansa ay 200, pero we have sold a total of 1,000 yun. Yun yung estimate na. So ngayon, dahil na-redeem na yan, income na rin natin yan. 480 times 200 out of 1,000. Next, this year, meron tayong estimated unit na 1,250. Okay? And we have a contract liability of 600,000. So, 600,000, that's our contract liability premium, divided by our estimate is 1,250. We have claimed 900, this one. Ayan. That's it. So our income from premium would be 528. So that's the biggest new thing about PFRS 15, yung pag-allocate natin ng ating price between the premium and the sales, and yung pag-recognize natin ng premium expense, which now based on the actual, at yung ating pag-recognize ng income, which is allocating our what we have redeemed over our estimated to be redeemed. Okay. And this takes time. Sabi ko nga before it clicked. But if it's once it clicked, you will always be able to do it. It's just a matter of practice. Okay. So you can pause this video if you need more time to process it and repeat any of the parts that you need repeated. Okay. Next example, we have orangutan. So once again, we have the estimated number of packs. Out of 200,000 packs, ang estimate natin 40%. And out of that, we have our estimated number of units, which is 80,000 divided by, kailangan natin ng 10 empty packs. 8,000. The net cost per unit is yung cost ng ating mug, 120, plus yung ating handling or transport cost. Meron dito ngayon, which is 20, minus any customer payment, which is 50. So our net cost per unit would be 120. This would mean that the standalone price for premium would be 8,000 times 120. So ang sales natin ay 200,000 multiplied by 45. Okay? Our premiums, kakakompute lang natin, 1 million. Ang total price na na-recognize natin ay 9,000. So, 90% will be allocated to our sales, 10% will be allocated to our premiums. So, our price allocation would be 90% and 10%. That's it. Okay, so we have received cash worth 9 million. Out of that, ang ating sales revenue ay 8.1 at yung ating contract liability from our premium would be 900. dito, actual cost lang tayo, ano? So our premium inventory will be credited. Ang ating actual cost ng ating mug ay 120. Amo na natin, 120. Okay. Yung cash na babayaran natin for transpo ay 20. At yung marireceive natin from our customer is 15. Okay. So ang net cost natin ay 120 plus 20 minus 15. That's 120. And now you just have to multiply it by the number of actual units distributed. Eh, ilan ba yung actual na na-redeem natin? 64. So, i-multiply mo lang yan ng 64. So, that would be 64 times 120. 64 times 20. 64 times 15. And this would be 64 times 125. That's it. Okay. And lastly, we have the recognition of income. All right. So similar to the previous steps that we had. Okay. Kopyahin natin to para same na same yung pattern ng ating solution. Okay. So our total credit initially from the contract liability of premiums is 900,000. Ang ating estimated units na i-claim ay 8,000. By the way, kulayan natin para matrace natin. Saan nang galing yung 8,000? Okay. Out of 8,000, ilan yung actual na na-redeem natin? We have distributed 6,400. So, ang natira, 1,600. So, ang percentage natin ay 80% and 20%. So, out of 900,000, we have redeemed 80% and we have not yet redeemed 180,000. So, ang income na natin ay 720,000. Okay, tama ba yung ating pag-allocate? Confirm lang natin. Alright. Let's go to the next one. The standalone price for premium estimated number of. For year 2024, our estimated number of packs is 240,000 multiplied by 40%. And our estimated number of units would be 96,000 divided by 10. And our net cost per unit would be the same, 120 plus the holding or handling or transportation cost of 20 minus the customer fee of 15. So that would be 120 plus 20 minus 50, 125. So the standalone price for premium would be our estimated number of units multiplied by our net cost per unit of 125. So our standalone price would be 1.2 million. 1.2 million. Okay. So for our sales, meron tayong na-receive na 240,000. Out of 240,000, ang cost natin or ang sales price natin ay 45. So we have received a total of 12 million. I-allocate natin yung 10.8 na actual cash received between the sales and the premiums. So that would be as a percentage 90 and then 10. So 90, 10. Okay. So out of 10.8 million cash, we have allocated 9,720,000 and 1,080,000. Next, for premium inventory, parang ganito rin, no? It costs us 120 per unit, 20 per unit. We will receive 15, so the net cost is 125. We will merely multiply it by the actual number of mugs redeemed, na 10,000. So 10,000 times 120. 10,000 times 20. 10,000 times 15. And 10,000 times 125. That's it. And eto na, probably the hardest entry out of all. We debit the contract liability premiums and we credit the income from premiums. So, our total redeem ayan, using lang natin. Ang total na na-redeem natin ay ilan? 10,000. Out of 10,000 mugs, ilan yung nanggaling from last year on sick? Dito ano? Kulayan natin para alam nyo kung saan nakuha. There we go. So, ibig sabihin, from current year, ang na-claim natin ay 8,400. Okay? So, again, this would be what we have redeemed out of the total estimate multiplied by the contract liability. So we have redeemed 1/6. The total estimate initially from last year is 8K, and the contract liability is 900. This year, we have redeemed 8 our estimated units, 9/6, multiplied by our premiums, contract liability is 1,080,000. Okay. Palawakin natin ito para makita natin ang complete picture. And that's it. So 1/6 times 8 divided by 8 times 900,000. 180. Okay. And then this one would be 84 or 96 ay na-claim multiplied by 1,080,000. I-link natin dito sa cell na to. There we go. So our total income for this year would be 1,125,000. So that would how we would account for premiums under the new standard PFRS 15, wherein we will allocate the price based on two obligations, which is for selling the product, which will immediately be recognized as revenue, and our contract liability from premiums. We will only recognize this as income once we have distributed the premium. And that would be the contract liability multiplied by what was redeemed divided by the estimate. As a summary, let's differentiate PAS 37 and PFRS 15 in our notes. Okay. So under PAS 37 and PFRS 15, parehas po ito. Ayan. Okay, parehas rin ito. Same. Kulayan natin na gray yung mga pareha. So, ito, iba lang yung term. Tinatawag niyang premium expense. Itong stand-alone price naman yung ginagamit niya sa PFRS 15. Okay? Dito sa PAS 37, after getting the premium expense, kukunin mo yung redeem, ang pinagkaiba lang nun ay actual. Okay. Actually, kung isisingit natin siya dito, di ba natin to? Itong amount na to is what PFRS 15 calls as premium expense. The actual coupons divided by the coupons per unit, so actual units distributed multiplied by the net cost per unit. Premium expense yan, under PFRS 15. So, kitang-kita yung difference, under PAS 37, yung estimate, yung premiums expense. Under PFRS 15, yung actual, yung premiums expense. Ayan. Okay? But anyway, itong ating premium price na sinasabi niya dito, select here. You will now use this to allocate it from the sales. So the total price, sales price, premium price, and total price. But we know that the actual cash received is still the sales price here. So, eto yun. Out of the total sales price na i-debit mo na, you will credit sales by the sales price times sales price divided by total price. And then you will credit contract liability by the sales price times premium price divided by the total price. Ang entry ng ating PAS 37, ito buong sales. Wala siyang ina-allocate na unearned revenue under PAS 37. Kumpletuhin muna natin si PAS 37. Si PAS 37, dinedebit niya si premium expense and credit niya si premiums liability based on estimate. I-all caps natin. Okay? And then, i-debit niya si premium liability based on the actual cost. Pero ang ginagamit na term ni PFRS 15 sa kanya, imbis na debit premium liability, it would be the premiums expense already. Okay, parehas na parehas yan, no? Pinagkaiba lang yung term na ginamit. So once again, ulitin natin hanggang matandaan ng lubusan, yung ating premiums liability, naka-debit under PFRS or PAS 37. Yung premium expense naman, naka-debit under PFRS 15. And another new entry for PFRS 15 is the recognition of income from premiums. Meron ito kasi nga ina-allocate natin yung sales yung sales price sa two obligations. On the actual sales itself at dun sa actual na premium. So the contract liability amount multiplied by the actual units redeemed divided by the estimated units redeemed. So this is basically the concept na erasing the numbers. This is simply comparing the two standards. Okay? That's it. So once again, if you want to have a free copy of our notes here as well as the question, then feel free to check the link in the description below. And if you've reached this point, thank you for watching the entirety of this video. And I hope that you really learn a lot throughout the next couple of videos that I will upload. Thank you and see you soon. Bye.